All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's January 12th, 2022. Man, do we have a lot of interesting topics to cover in this video. Obviously, the big news is the CPI report, the jobless claims, and the market's reaction to all of that. But there's a lot of other things going on sort of beneath the surface here. We've got Fed Ghoul news. We got more comments from the Federal Reserve, Jim Bullard, and also Powell. I want to talk about the bonds again. You know, we've got these economists recommending short-term, not only short-term government bonds, but short-term corporate bonds as well. Big news in the currencies. And, of course, we're going to be talking about this big story I've got about the FDIC. Some of you have seen this video on Wall Street Silver, but apparently the FDIC had a regulatory meeting back in October. And I've got, will probably be the one soundbite if I can get it to play. I'm going to leave the links for everything in the description down below. But the FDIC basically is saying that there's potential for bank runs. We'll get into the story, okay? And then we've got a few other interesting headlines. We're going to be talking about bank earnings towards the end of the video here because this could be really the data that the market needs to either move one way or the other. So CPI comes in today in line. The headline inflation in line with expectations, core inflation in line with expectations. I think year over year we're at 6.5%. So the expectations or the leaks were right, except for a lot of the service sector. Services remain elevated, especially services when if it involves the real estate markets, the housing market. Services are also tied to wages, and we got the jobless claims numbers. That was 205,000, down 5K from last week. Okay, wages as well. Instead of being down 0.5%, which is what they were leaking, only came in 0.1%. So obviously in the services sector with wages, things remain elevated. I said this in yesterday's video, but we sort of saw the consumable products inflation and the actual goods. We've seen that inflation kind of move into, as that's been coming down, the inflation sort of shifted over to services. So definitely concerning when you think about maybe the Fed's reaction to the wages, still kind of showing some stickiness there with these inflated numbers. The jobless claims as well. I mean, as fucked up as it sounds, we want to see the jobless claims go higher. We want to see the new claims higher every week. The existing claims remaining elevated, because this will at least be an indication for the Fed that their interest rates are working and they can kind of slow down on it. But I don't think that's going to happen. I don't think we're going to get a slowdown in inflation or interest rates, at least short term, looking out a few months here. So as per usual, mixed data, kind of hard to read this stuff, but not quite the big, inflation retreat that I think the market was hoping for. What is it going to take to get inflation down to 2%? If you think about going from 9% inflation, which I think was the high, down to 6.5%, right? Incredible. It should be applauded, right? If the Fed is actually responsible for it. They're getting the inflation down. But think about how long it took. It took 6 months of, if not more, of very high interest rate hikes, 50 basis points, 75 basis points. So what's it going to take to get inflation from 6.5% down to 2%? We're a lot further away from 2% than 9% is to 6.5%. So I want all of my viewers to consider this. Consider this, especially if you're investing or doing longer term trades, because as I think it was Chuck Barone said this in a video a couple of days ago, the lower the number gets, all right, the slower the grind down, right? So 6.5% down to 2%, that could take even a lot longer than the 9% to 6.5%. So how are the bonds reacting to all of this? Bonds are actually up. I'm watching TLT. The price of the bonds is going up. The yields are going down in a pretty significant way. Now, that being said, we still have the yield curve inversion. It kind of looks like the 2-year, I think, is the highest yield right now, with the might be the 10-year being the lowest yield. Jeffrey Gunlock, I mentioned this in a video last night, says, listen to the bond market. Do not listen to the Fed. But a lot of people speculate the Fed is the one that is buying up the bond market. I mean, who else would be buying this debt? And so, what is the bond market really telling us? It's telling us in the short term there's destruction, recession, a lot of fear. But is the bond market actually telling us what we think it's telling us? That is a question that I'm ruminating and trying to figure out some alternative narratives that you could take from the current state of the yield curve inversion and all of that. So maybe markets are in a sort of don't fight the bonds type of state, because you generally see right now when the bond prices go up and the yields go down, the stock market is supported by this. Mohammed El-Erian, a big economist at Cambridge University, says to buy short-term bonds, including short-term corporate debt. To me, that sounds like a very risky scenario, but compared to stocks, it says also, get into cash. Well, if you're down 80% on Tesla or 90% on Bitcoin or however much money these people lost, and you're still holding, to sell out now and go to cash, to me, it seems like for some people that may not be a very wise decision. I'm sure some people are going to be doubling down on their bets, especially if they're holding long-term stocks. I mean, why not? Especially if you have steady income, maybe you're not a trader or whatever, maybe this is your retirement account. Why not double down on the stocks? I mean, obviously you could sort of nibble in over the course of the year, because I'm not convinced we're not going to see new lows. That's just me personally. I think a lot of people agree with this. So in this article from Insider, I'm going to link that in the description for sure. The top economists are warning, quote, inflation will remain stubborn at 4% because the Fed acted too late. So, this kind of goes back to what I was saying, where the lower the number gets, the stickier the inflation is, the slower the grind back down to 2% really is. Is the Fed going to be able to accomplish this, or are they going to have to eventually raise their targets? They have been asked this a couple of times. So yeah, TLT up 1.4%. It looks like the bonds, at least for today, are taking some of this information as hopeful. All right, we're going to talk about currencies, because we have the dollar plummeting nearly 1%, if not more. I'm not exactly sure where it's at, but when I was looking at it, it was over 1% down on the day. The chart not looking good, but we are entering sort of a demand area from last year that I think we could see some strength in. The euro showing strength as well. I mean, we talked about the euro gaining against the dollar, but also gaining against the pound. I still believe that, you've got very wealthy banking cartels and people within that community that are shorting the pound, that are maybe for political reasons, geopolitical reasons, or just monetary reasons, right? Maybe to force the UK into the euro somehow. I don't think the European Union or the currency, I don't think the banks in Europe are satisfied with the status quo when it comes to their monetary relationships with the UK. Croatia, a couple of days ago, I think it was the first, it got rid of their currency, the kuna, I think is what it's called, and switched over to the euro. Some prices have doubled since the switch to euro. So consider that. I mean, are people in Croatia open up for a rude awakening? I was reading some articles about this, and it seems like some of the people kind of want the change, but others are skeptical as to how helpful this is going to be to the Croatian people. The pound rallied a bit, but again, I think the pound is under serious pressure. I think the UK, just as a economic and political unit, is going to be under a lot of pressure. The Egyptian pound down 5%. This is a new low for the Egyptian pound. They're having all sorts of problems over there. And we talked about the Mexican peso rallying against the dollar the last couple of days. It's good to see that our local currencies are strong. I think that's nothing wrong with that. So in Fed Ghoul news, let's move on to, this is my favorite part. This is your favorite part of the podcast. I know this is why a lot of people watch this. Fed Ghoul news, right? You have... This is coming from a Morningstar article you guys can read for yourself, but Bullard wants 5% interest rates, and he wants them soon. Remember a few months ago he was calling for 7% interest rates. Well, now he's calling for at least 5% interest rates, but he wants to get there as quickly as we possibly can, whereas some of these other Fed ghouls from St. Louis and maybe San Francisco, or no, what was it? It might have, no, it wasn't St. Louis, but San Francisco, maybe it was the Minneapolis school. There's so many Fed ghouls, it's hard to remember where they're all from. But remember, a couple of them earlier this week were saying we could kind of take our time getting to 5% interest rates. Well, that's not what Bullard is saying. He's got a completely different tune. He also says, and this is key, guys, Bullard says that inflation likely won't fall in a straight line. He says it's unlikely that it's going to fall in a straight line. I've been saying this for, months now? It doesn't matter what asset you're looking at, what index you're looking at, what chart. It could be stocks, could be cryptocurrencies, could be commodities. These things never go up in a straight line, and they never fall down in a straight line. So with inflation, why would it be any different? He also went on to say, his exact quote is in this Morningstar article, but he says that he warned that inflation was unlikely to fall in a straight line and that markets have not priced in the risk of a reversal. Take that for what it is. Powell, all right, this is, he said this at the symposium in Sweden, and it's related to, I mentioned Isabel Schnabel from the ECB is talking about green agenda monetary policy or central bank monetary policy that will support the green transition. Powell is taking, at least publicly, the exact opposite stance. He says that the Fed will not be a, quote, climate policy maker. Is this sort of some good cop, or maybe bad cop, good cop, bad cop, the good cop being Powell? Is this some good cop, bad cop, psychological operation? They're playing on the people, playing on the markets. Even if the Fed's policy is, kind of green, or to maybe lend more to greener corporations and not make credit as available to like oil companies, even if that was their agenda, I would rather them not admit it publicly. I would rather them do it behind the scenes and not admit it publicly. But I thought that was very interesting. This all was being talked about at the same symposium in Sweden. So different opinions at one conference, and so maybe they're not all on the same page. We have to consider that too. There may be some. We tend to think, oh, the globalists, the bankers, whatever. They're all on the same agenda and they all want the same exact thing. We have to think through that. There could be some, political issues up there as well when we're thinking about, the financiers, the higher ups in society. So I want to get to this FDIC insurance story. This is a tweet coming from Wall Street Silver. You guys have got to see this. The link is going to be in the description. I mean, you can't make this up. Let's see if this will. Let's see if we can get some audio here.
It should be accessible when people need to know. But
okay. So I think you guys will be able to hear this. I'll turn the microphone. I don't want to touch the microphone too much because my cord is bad. But this is the FDIC Regulatory Committee. They met in October to discuss the I suppose the issue of solvency and national banking crises. Just listen to what they say here.
We have much hope of reaching a public that doesn't have a professional need to know.
Reaching a public that doesn't have a professional need to know. Just continue.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people who charge them by the hour a lot of money to explain this all to them. and it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
So, in the general public was his last word there. I think I cut it off. To me, that's just alarming. You know, I've been seeing all the headlines from the YouTubers about the bank runs. Supposedly this is what they're talking about. This, to me, should be like the biggest story right now. Again, that's coming from a regulatory committee that met back in October to discuss the fact that the FDIC, they're insuring something like, I think it's $7 trillion worth of assets with like 150 billion that they could actually cover. I mean, just imagine that, right? There's $7 trillion, bank account, $7 trillion worth of bank accounts, Americans, bank accounts, stock accounts, whatever it is. And they have 150 billion in cash that they could actually cover. To me, everybody should be extremely concerned by this, and the fact that they're saying, the hedge funds and the Wall Street guys, they're going to figure this out, and their lawyers are going to figure this out. But let's not blast this to the public. Let's make sure all the rich get their wealth out first before the public wakes up to it. So that huge news. So I guess this is what all the YouTubers are talking about when they're talking about bank runs, bank runs coming soon. I'm not naive enough to think that we couldn't have some sort of run on the bank. I just don't know what to say about it. You guys let me know. I mean, do you think that the FDIC is doing us a favor by trying to suppress this information? The media is doing us a favor by trying to suppress this information? Or do you think it's just a matter of time before it all gets out and, we're all going to be screwed? So, and that would probably require huge, expansive monetary policy from the Fed if they could, save us from that. Okay, some interesting news real quick. I'm just going to go over this, then we're going to get into the bank earnings and what I'm going to be watching for these corporate earnings coming up this season. So, Gavin Newsom to spend $3 billion a year on homelessness. And I suppose that's, free needles, maybe Suboxone programs, meth, marijuana coupons to marijuana stores. God knows what they're providing these poor souls in California. Inflationary, I mean, you tell me, $3 billion going to people for free, tens of thousands of people on the street that are just getting $3 billion. A lot of this funding, too, is going to the state. Obviously, the state actors are getting paid, but I would tend to think this is going to be a very inflationary program. I can't help but wonder if these storms, the everything we're seeing going on with the weather in San Francisco, I can't help but wonder if there's some, spiritual component, right? Sodom and Gomorrah. Just some thoughts, personally, some spiritual thoughts that come to mind and things I have to ponder. You let me know if you agree. Maybe you don't agree. Maybe you think I'm just a superstitious Christian weirdo. But, could the weather have a spiritual component to it? Like, what happens when an entire state, an entire city descends into the worst type of carnal sins and desires? What happens to a state like that? At least in God's eyes. So U.S. and Canada airlines were down for hours, days. They're blaming it on antiquated computers. What's really funny is they say, oh, well, in the U.S., there wasn't a hacking. It wasn't, any issue like that. It was just antiquated computers. And then the very next day, the same exact thing happens to Canada. I was even watching Morning Joe, watching those fools this morning. They weren't even buying that narrative. So obviously something weird's going on here. I don't know if it's cyber attacks or what. I know there's been supposedly a lot of attacks on the grid. What's with everybody attacking the grid? I mean, why weren't they attacking the grid 10 years ago? But now all of a sudden the grids are being attacked. There's something more to these stories. I don't have time in my day to actually go deeper into it, but I'm highly suspicious of what we're seeing here. The Biden documents. I just wanted to mention this. I mean, I think the whole thing is a total left-right psyop. They find documents in Mar-a-Lago. They found documents in Biden's It's actually Hunter Biden's home in a Corvette, and they've been there for like a decade. This stuff is crazy, guys, but I don't think we should pay too much attention to it. I mean, for comedy relief at the end of the day, maybe after a bad trade, okay, but how important is this stuff really? I don't think it's that important, but it is hilarious, right? I think it's just, I watch it for comic relief. It's sort of like my my nightly trash content I gotta watch. And then Jamie Dimon backing down from these economic hurricane comments that he made, 2 months ago? He said we were going to descend into an economic hurricane. He saw, just total destruction. Well, he's sort of backing off on that now. And he's probably just covering his own ass, because if he's wrong, because a lot of people are saying we're going to have a soft landing. The Fed is saying this. Even Jim Bullard is calling for a soft landing now. Jamie Dimon calling for a soft landing. Maybe he's backtracking to some of those hurricane comments because he realizes he's going to look pretty foolish if he's wrong and we don't have an economic hurricane. He may not look as foolish as Kevin O'Leary, but nevertheless, he's covering his tracks here a little bit, backing down on those very strong comments that, remember he said we were going to lose like another 20% in the S&P 500 from the levels it was at back in November. So what the hell does Jamie Dimon know? Maybe nothing. Okay, bank earnings tomorrow. This is very important. We're going to end this video on a very strong note, because I want all the traders out there and just everybody that's involved in economics and finance that's interested in this, watch the bank earnings tomorrow, because the bank earnings could be the canary in the coal mine. We need to look at these fourth quarter earnings and fourth quarter profits. If all of this stuff for the banks and the corporations will start following suit with the earnings calls, the week after that and through the next month or so. If fourth quarter profits and earnings are much weaker in 2022 than they were in 2021, this is going to spell all kinds of uncertainty going into the rest of this year, 2023. So you let me know what you think, what you're expecting. I know some of you hold these bank stocks like JP Morgan's reporting, Citigroup, Wells Fargo, Bank of America. I don't think Goldman Sachs reports tomorrow, but you guys let me know what you think in the comment section down below. How are these bank earnings and corporate earnings going to go? I mean, I'm kind of thinking about all these layoffs, and if Goldman Sachs is laying off all these people, how good could the profits really be? So definitely something to watch for and consider. The last thing we will mention in this video was my trade today. A little bit of a psychology lesson too. So we had a pretty good day, almost $800 on the day. It was a pretty stress-free trade on Amazon. Amazon opened up in a supply zone. I took it short. We did crack right above the supply zone, but I don't always map these things out as precisely as some people do. So I gave it a little bit of room. As soon as I saw some red candles in that supply zone, I took it short with puts. It was a pretty stress-free trade, but I was looking back at my trade and I saw how far down Amazon went after I had exited my put position, and I started thinking like, $800 on the day, I could have squeezed so much more out. It wasn't a $1,500 day. Maybe it could have been a $2,000 day. I started having these thoughts, and as a trader, I think I have become somewhat jaded, right? Because remember we were talking about my $200 wins. I made a $175 win this week, and there's like a void, right? It's I'm not exactly sure what it is. Maybe it's being jaded. Maybe it's being addicted to the large wins. Maybe it's feeling psychologically entitled to larger and larger wins, because I'm just that good, or I deserve it, or, I've been poor all my life, so give me the money. These kind of thoughts can be very destructive, and I recognize these destructive thinking patterns in my life. So, what did I do? I went on about my day. I closed the computer. I went to the gym. I had a great workout. I had to take my cat, Pete, to the vet, and I went about my day. But I do want to at least acknowledge that, even though I had a big win, $800, it was like 21% in the account. And as small as my account is, now it's over $4,000, but this morning it was like a $3,600 account. Now it's like almost a $4,500 account. There's something about trading where it starts to, these wins, they start to not have the same sort of like it's harder and harder to get that rush, when you've had huge wins and you feel like you're making chump change. But again, I'm going to try to think about, how much food can I buy with $800? For myself, I could probably buy maybe 2 or 3 months, worth of groceries with $800. So, that's a lot, and I need to be humble. I am grateful. I'm blessed by God. All of us are blessed by God. If you're watching this channel, you are blessed by the Holy Trinity. And with that, follow me on Instagram @MillennialTrade. Subscribe to this channel. Give the video a like. I appreciate you guys being here. I appreciate all the comments. And if you're watching on BitChute, we got some of the trolls over there. It's much appreciated, everyone. Have a blessed rest of your evening. Thank you for spending some of it with me. And as always, until next time, I'll see you on the next video.